In the last video, we talked about the mistakes you make. We talked about why retail investors panic, why they buy high, and why they sell low. But today, we are leaving the retail world behind. Today, we are going to look at the whales, the entities that actually run the financial world. I'm talking about central banks. For decades, the heads of these banks, the Federal Reserve, the ECB, the Bank of England, have told the public that gold is a barbarous relic. They have told you it is just a tradition. They have mocked it in interviews. But while they were telling you that gold was useless, they were buying it. In fact, in the last few years, central banks have bought more gold than at any time in the last 50 years. Why? If gold is just a pet rock, as Wall Street likes to say, why are the most powerful financial institutions on Earth hoarding tons of it in deep underground vaults? The answer is terrifyingly simple. They know something is breaking. And they are preparing for a world where their own paper money might not work like it used to. Welcome back to Crucible Markets. Today, we are going to look at the central bank playbook and show you why you should do exactly what they do, not what they say. Let's start with a little history. If you go back to the 1990s and early 2000s, central banks were actually selling gold. The economy was booming. The internet was changing everything. The US dollar was the undisputed king of the world. Peace seemed permanent. In that world, gold did seem useless. Why hold a heavy metal that pays no interest when you can hold US Treasury bonds? So, countries like the UK and Canada sold massive amounts of their gold reserves. They famously sold at the very bottom of the market. But then, 2008 happened. The global financial crisis broke the illusion of safety, and suddenly the selling stopped. Fast forward to today, the trend has completely reversed. According to the World Gold Council, central banks are now the single biggest driver of gold demand in the world. China, Russia, India, Turkey, Poland, Singapore. They are buying tons of it. Literally, tons. But here's the catch. While they are buying, listen to what they say in public. Ben Bernanke, the former head of the Federal Reserve, was once asked by Congress, "Is gold money?" His answer? "No, it's a precious metal." He said it with a straight face. This is the great deception. They want you to hold their paper currency, and while they hold the hard asset that backs it up. They want you to trust the system, while they insure themselves against the system failing. Quick question for the community. Do you trust what central bankers say in public? Type yes or no in the comments right now. I want to see how much faith you really have in the people running the money printer. Now, I need to explain something technical. Usually, when people talk about banking regulations, eyes glaze over. It sounds boring. But this specific detail is the smoking gun. It proves that the elites view gold as money. It is called Basel III, Basel III. Basel III is a set of international banking rules. It dictates how banks count their assets and calculate their risk. For a long time, gold was considered a Tier 3 asset. That meant it was considered risky. If a bank held gold, they couldn't count it as fully safe capital like they could with cash or government bonds. But in 2019, quietly, without many headlines, that changed. The Bank for International Settlements, which is often called the central bank of central banks, upgraded gold. Gold became a Tier 1 asset. What does that mean? It means that for the biggest banks in the world, physical gold is now considered risk-free. It is now considered just as good as cash, just as good as US Treasury bonds. Think about the significance of that. Publicly, they tell you gold is volatile and risky. But in their own rulebook, the rulebook that governs the global financial system, they reclassified it as the safest asset you can possibly own. A zero-risk asset. Why would they do that? Because they needed to bring gold back into the system. They realized that in a world of infinite debt, the only collateral that has no counterparty risk is gold. They quietly remonetized gold while the rest of the world was distracted watching the stock market. But it's not just about banking rules, it's about war. Not necessarily war with guns, though that is happening too, but economic war. For the last 80 years, the US dollar has been the global weapon. If the US doesn't like what a country is doing, they can cut them off from the dollar system. They can sanction them. They can freeze their assets. We saw this happen to Russia in 2022. The US and Europe froze hundreds of billions of dollars of Russia as foreign reserves. Now, put yourself in the shoes of China, or India, or Brazil, or Saudi Arabia. You watched that happen. You saw that your savings in dollars could be frozen with the click of a button in Washington or New York. Suddenly, the US dollar doesn't look like a safe haven. It looks like a trap. So what is the only asset that is liquid, universally accepted, and cannot be frozen by a foreign government? Gold. If you have physical gold in a vault in Shanghai or Moscow or Mumbai, the United States cannot switch it off. It has no digital footprint. It answers to no SWIFT system. It is sovereign money. This is why China is buying gold every single month. They aren't trading it for profit. They are de-risking from the dollar. They are building a financial wall around their country so that if a conflict happens, they can still trade. Gold is not just an investment for them. It is national security. And if it is national security for a superpower, do you really think it's just a pet rock? If you are enjoying this deep dive into the truth, please make sure you are subscribed to Crucible Markets. We don't just look at charts here, we look at the power dynamics behind them. There is one more reason they are buying, and this one affects you directly. It is the debt. The world is drowning in debt. The United States alone is adding $1 trillion of debt every 100 days. The math is becoming impossible. The interest payments on the debt are now higher than the defense budget. Central bankers are not stupid. They are very smart people trapped in a bad system. They know that eventually there are only two ways this ends. 1, they default on the debt, which destroys the economy. 2, they print the money to pay the debt, which destroys the currency. History tells us they will always choose option 2. They will print, they will inflate the currency away. When you print trillions of dollars, the value of each dollar goes down. So how do you anchor a balance sheet when the currency is evaporating? You hold the one thing that cannot be printed. You hold gold. Central banks are buying gold because they know the end game of this debt cycle. They are essentially betting against their own product. The Federal Reserve's product is the dollar, and by buying gold, or allowing other banks to reclassify it as Tier 1, they are admitting that the dollar is losing its dominance. They are hedging their bets, and if the people who print the money are hedging against that money, shouldn't you? So, what does this mean for you, the individual investor? It means you need to stop listening to the talking heads on TV who say gold is dead money. You need to stop worrying about the price of gold dropping $20 on a Tuesday. You need to adopt the central bank mindset. Central banks don't trade gold. They accumulate it. They don't panic sell when the price drops. They buy more. They don't care about next week. They care about the next decade. They view gold as the foundation of their portfolio, the unshakable rock that everything else stands on. If you start thinking like a central bank, your entire view of investing changes. You aren't spending money to buy gold. You're simply exchanging paper money, which is losing value, for real money, which holds value. You become your own central bank. The game is rigged. But now that you see the cards, you can play the game properly. The big players are moving into position. They are building their fortresses. The question is, are you building yours? Now, I know what you're thinking. Okay, I get it. I need to own metals. But what should I actually buy? Should I buy bars, coins, ETFs? Should I buy mining stocks? And what about silver? Is silver part of the central bank playbook? The answer to that last question is complicated, and it is where the biggest opportunity might be hiding. In the next video on Crucible Markets, we are going to get tactical. I'm going to break down how to actually buy gold and silver. We will talk about premiums, coins versus bars, and the specific traps that dealers use to overcharge you. This is the practical knowledge you need to turn this theory into action without getting ripped off. If you are ready to become your own central bank, hit that subscribe button and ring the bell so you don't miss the next class. And before you go, let me know in the comments, if the US dollar crashes, what do you think will replace it? Bitcoin, gold, or a new currency entirely? I'll be reading your theories. Thanks for watching Crucible Markets. Watch what they do, not what they say. I'll see you in the next one.